Good evening, friends. Uh, I promise this is the last video of today. Now, I was watching, and a lot of people, they are interested in trading intraday futures of individual stocks. And let me give you a very simple strategy. Now, obviously, you know that I uh, don't put up charts as examples. So, what I'll be doing is I'll be giving you the strategy, but you have to look for examples on your own. Why? Because I want you to also do some hard work. Okay, now let me explain the concept. First of all, open the daily chart of 10 to 15 stocks which are on your watch list. They should be large liquid names, because what sometimes can happen is that futures tends to have volume the day there is news flow on a certain individual stock, and only the large, say 15 odd stocks. I mean, the examples would be Kotak, Bajaj Finance, Maruti, all those halo type stocks. You can easily make a list of 15, and that is your universe. Now, first of all, look for charts where the 20-day moving average is either clearly pointing up or down, which means almost all the candles are either above the 20 DMA or are below the 20 DMA. Okay, so this is your main trend, right? Let's assume, for the sake of example, that you have just chosen a stock which is trading above an upward pointing moving average, which is 20 DMA. Now, the next day, what you need to do is to stock that stock on the 5-minute chart and see if the stock corrects towards the 200 period average on the 5-minute chart. All averages are simple. So, what is the concept you are trying to do? That on a strong daily trend, you are trying to buy a dip. Okay, where is the stop? Obviously, you will buy the dip once the stock starts to turn around from the 200 of the 5-minute. Your stop goes below the 200 period average, and as the stock makes fresh highs, you start scaling out of your position, which means, if say you have 3 lots, you take off 1 lot as the stock moves in your direction. If it gathers momentum, take off another lot, and if it starts to continues to run, you take out the third lot also. Let me repeat the strategy on the downside. Say any stock which is trading below the 20 DMA, the 20 DMA is pointing to the downside. That should appear on your watch list. And if for some reason the stock gaps up or moves higher and tests the 200 of the 5-minute chart from the downside, you should be ready to act. Put a stop right above the 200, and as the stock moves lower, you start scaling out of your position. A very nice example of this on the Nifty was Wednesday, when you remember that the Nifty gapped up 50 points and immediately started to see a sell off, right? So that is how the ideal stock should act. Again, if you desire, you can easily find examples of this strategy, and most of the time it will work. It will easily give you a 3:1 reward to risk. But choose your stocks well. When you want to buy, choose stocks which are in an uptrend. Choose stocks where the 20 DMA is pointing to the upside. What is the 20 DMA? If you want to choose a stock with strong upside momentum, a rising 20 DMA does that. If you want a stock with strong downside momentum, a declining 20 DMA does that. So what we want is, we want to buy strong stocks and sell weak stocks. That is the crux of this strategy. Okay. I am sure if you create a 15 stock universe, you will be able to easily identify which are the strongest plays and which are the weakest plays. Go with the market direction. That is important but not critical. If your sector is doing well, that could be one of the factors, that you want the sector tailwind to be behind you. So as many factors as you can turn in your direction, the better the odds of winning of this strategy would be. I am sure that if you try and work this out with practice and with time, you will learn how individual stocks can be traded in the futures segment. Now, some people would ask me, can I use the 15-minute chart? You can use any intraday time frame, which means a 15-minute chart will allow you a swing entry. A 60-minute chart may even allow you a positional entry. Theory remains the same. You are trying to buy the dip in a uptrend and sell the rally in a downtrend. On an intraday basis, the 5-minute chart is the best, but your profits and losses will be in proportion. Okay, that should be it for right now, and I hope you had a great weekend. Thanks for listening in.